Hi, Jon Morris here. Today I want to talk to you about how to rate your accountant or fractional CFO in 4 simple ways. Before I do so, I just want to explain why this is important. Okay, one of the most effective ways to grow your business is to ensure that you are allocating every single dollar to the areas that are going to generate the greatest return possible. And oftentimes there is waste in terms of how you're spending your money. You might have cash flow issues. So getting control of your finances is incredibly important and is honestly one of the greatest secrets necessary to grow your business. Now, before I get into those 4 ways, I want to share some stories with you of things that I've seen working with my clients and prospective clients in terms of the people they're currently using. So one of my favorite stories is, and by the way, I hear this across the board. Every single person I talk to says, I have the most amazing accountant or the most amazing fractional CFO, only for me to dig in to find out that they are very far from having a true CFO. So the first thing I notice is that many accountants just focus on tax. And so they're not giving you insights into your business in terms of what it takes to grow your business. Here's a really good example. I had a client, I looked at their income statement, and they're using their accountant that is, once again, one of these amazing accountants to manage all their books. And there was a line item which said returns, and it had zeros across the board. And when I talked to the accountants, I asked them, I was like, would you agree that something seems strange here, that, the return should be more than 0 every single month? And he said, absolutely. And then I asked him, I was like, so do you consider in your scope of service, your job, to tell the client that something seems strange here? And the response I got was, no, that's not his job. His job was really simple. He wanted to make sure that all the numbers were accurately reflected so that he could put the tax return together. So there's clearly a problem within the income statement, but because the numbers in the bank account match the numbers in the income statement in their accounting software, he can check the box and say he's done his job. Another really good example I've seen is just pure garbage in, garbage out. So I had a client, they're doing a few $100,000 a month in revenue. Their books weren't up to date. I had a conversation with their amazing accountant. The amazing accountant explained exactly how I want things to be structured, what to do. Said, not a problem, it'll be done in a week. So a week goes by, and nothing's done. A couple weeks go by, there's nothing done. About a month afterwards, he finally says, everything is done. So I do something really simple. I run an income statement by month, which means that I can see every single month, year to date, what the revenue is, what their cost of service is or goods, what their expenses are. And it shows in January, $17 was the total revenue. And it was not accurate at all. Okay, substantially more revenue than what they were showing. And so in this scenario, that's what I call a level 1 fractional CFO or accountant. The level of information is not accurate. It is not done in a timely manner. You cannot gain any insights whatsoever from the way the reports are put together. Another story, going back to this level 1 fractional CFO, is I'm talking to a potential client and talking to them about, cash flow analysis and budgeting and forecasting and analyzing why things worked well against your budget in last year or why they didn't. And he paused me and said, Jon, he's like, you are way ahead of the game. He's like, I just want an income statement. And I said, well, that's really easy. Your accounting software, you can just run the reports and have a income statement right there. And he said, Jon, I don't have access to my accounting software. And I said, okay, I want you to pause right now. I want you to go email your accountant, and I want you to ask them for access to all of your QuickBooks accounts. This company had multiple entities, so they needed multiple accounts. The accountant actually wrote them back and said, I only have access to some of them. I don't have access to all of them. So I'm just wondering, what was this person doing besides collecting payment from the client? I mean, it's clear that they've done no work whatsoever if they don't have access to the accounts. So I find that alarming, and I find this common. That's the part I find amazing, is there are a lot of companies that just do not have accurate financials that can make any insights off of them. The next level of a CFO is this scenario where the books are done on time. They're done accurately, but there's no insights into them. So give you an example. In this scenario, you look at the income statement, and people who are doing work on behalf of this company's clients is not reflected in the cost of service area. It's showing up in what is called SG&A, or sales, general and administrative expenses. And so you can't get an idea of what does it cost to really support the clients? Other things such as expenses like marketing or operations are all jumbled together, so you can't figure out how much they spend in a specific area. And so at the end of the day, the only thing they know is really what their revenue is and what their profits are. They can't tell if they're allocating their resources in an intelligent manner. The other thing, that first story I told you about with the accountant where they're all the zeros, that's another perfect example. The revenue was accurate, the profits were accurate, but there were glaring errors that should be addressed, and they weren't being addressed at all. The third level of a CFO is things are done accurately, they're done on time, and they'll go to the next step and identify a problem. It seems that you are spending too much money to support your clients. You have a gross margin problem. But that's as far as they go. They don't tell you any solutions, any recommendations on how to fix those problems. Or they'll say you have a cash flow problem, which obviously is important, but they're not telling you, here are the things I strategically think you should take out of the company, or what you should do to solve that problem. Which gets to the fourth level, which is where you want your fractional CFO or your accountant to be. You want your books to be accurate. You want them to be done on time. You want them to be able to identify problems. You're not spending enough in sales and marketing, which is why you're not growing faster. Your gross margin is not accurate. You have a cash flow problem. But the most important thing is they come to you with solutions to fix that problem. Okay? You have a cash flow problem. It's actually going to occur 3 months from now. And you have revenue in your projections that if you don't win that revenue, your cash flow situation is going to be even worse. So we recommend taking this much cost out of the business. I've gone through every single line item, and these are warning signs. I think you're spending too much money in this area, and I think we're going to have to dial it back. You have a bunch of open roles, and I think we're going to have to push the start date back so that we can put you in a better situation. And so what we're looking for is to ensure that you have a level 4 CFO, someone who's giving you accurate data, that's configured in a way to actually give you insights. They identify the problems, and most importantly, they give you solutions to solve those problems. Thank you very much, and I hope this was incredibly helpful.